Boom! Heyo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. What a day it was. The largest single day decline since the COVID crash. The one very specific thing happened today that stopped this bear market rally firmly in its tracks and just put a complete screeching halt to what has been about a 3 or 4 day rally that we've seen in the overall markets, but nothing more than a bear market rally. I thought that we called this little bounce in the markets last Thursday. I thought we had a little bit more room to the upside, but something very specific happened today. One specific company, one specific earnings report, really two, but one from today that really kind of put a screeching halt to the entire bear market bounce or bear market rally and put us right back into the bear market type of activity that we've been in for the entire year of 2022. As we've seen the Dow Jones Industrial Average decline by more than 1,000 points in a single day. Really the first time we've seen that since the 2020 COVID crash. But what does this all mean now going forward? I believe that we have just entered the second stage of this stock market sell-off. Now, there's good news and there's some bad news. And we're going to break all of that down here today on this live stream. You guys all have a choice to make. Okay. And we're going to explain, I'm going to talk about what that choice is, the facts that go along with that, and the decision that you're going to have to make is going to be up to you. But first off, it's important to understand who you're listening to, guys. I've got more experience than probably 90% of the finance YouTubers that you're going to see out there. My name is Michael Everett. I'm a trading and investing for over 15 years, and I began my career working at a hedge fund in New York City. It was my first job out of college. Then 2008 happened, the Great Recession and the stock market crash, but also the same year that I received one of the firm's Trader of the Year awards. Now, 15 years later, I'm the head trader and co-founder of True Trading Group, fastest growing and highest rated premium educational platform that's available to retail traders today. And since 2016, my team of 8 other professional trading moderators and myself have helped thousands of people from all over the world, from all walks of life, achieve their financial goals. What you are experiencing right now in the market is a stock market sell-off. It is a stock market crash. It doesn't feel very good in the moments that it's happening, but when the dust settles, you're left with tremendous wealth building opportunities. And I really do mean that wholeheartedly. There's a lot of people that think there's no way this guy's actually talking about this being an opportunity. This is crazy. There's chaos on the streets. People are running around with their hair on fire. No, because right now the S&P is not even down 20%. Okay. You're not even down 20%. I do believe the markets are going to go lower, but I have a very specific area in mind on the overall markets in the S&P, but also on the NASDAQ, on where I plan on taking a very big chunk and a big bite in a couple of names in my long-term portfolio, because every single time throughout history, if you go back to the early 1900s, every single stock market, significant stock market decline, every decline that's been 20%, 30%, 40%, 50%, you really never had. Okay, in my lifetime, we've never had a stock market crash in the S&P that was more than 50, 55%. So every single time that you go back in history and you look at all the stock market crashes, the Great Depression, right? You had, when you had World War II, you had, the 1987 crash, you had the 70s of stagflation and the recession there, and you had the dot-com bubble bursting, you had the 08-09 financial crisis, you had the taper tantrum in 2018, you had the COVID crash of 2020, and now you've got this, I'm calling it the bubble crash, the COVID bubble crash of 2022. And that's really what you're seeing. You're seeing the bubble that was created during COVID from a whole laundry list of things. You're seeing that bubble pop. Okay, that is what you are seeing. And I do believe that there is some more downside. I do not believe that the bottom is in. Okay, I do believe that we're going to be heading lower. Now, I've begun adding and nibbling in my long-term portfolio. I grabbed a couple of different things, but a small portion of the cash that I have on the sideline, because I do buy in chunks as the markets go down. But my next entry is going to be a big one. The next time that I step in and I start adding to my long-term portfolio, it's going to be a big chunk. I'm going to take about 50% of my cash that's on the sideline. It's going to go into the markets. Okay, that's what I'm going to be really looking for. Now, you have one choice. Or you have a choice to make. You have 2 different options, 2 different choices. Okay. You can turn on your television. You can see the stock market selling off. and you can go on social media and you can see everybody freaking out. You can sit back and you can do nothing. You can watch your IRA, your 401k, your long-term portfolios just completely diminish while you then eventually panic somewhere near the bottom. You sell for huge losses, and then you try to just hoard as much cash as you can over the next couple of years and then decide to get back into the markets after the markets have already recovered a few years from now. Okay. Or choice number two. Choice number two would be for you to actually see the volatility that's happening in front of you right now and then get educated to understand this volatility and seize the moment and doing what's needed to have the best chance to build wealth for yourself over time. Forget about Lamborghinis and mansions, guys. That's not what I'm talking about right now. A lot of people come on YouTube and they talk about, look at my car, look at my house, look at this, look at that. I'm not talking about Lamborghinis and mansions. I'm talking about being able to pay your bills, pay off your home, go to the grocery store without breaking a sweat, and not caring that the national average for gasoline is $5 for the first time. Okay, my Californians, I feel bad for you, $6, $7 in some places in California. Okay, and my European friends out there in Germany and other areas of Europe, the gasoline prices are even higher, what you guys call petrol, right? So, that's what I'm talking about. I'm talking about not having to stress about everyday expenses in this insanely high inflationary environment. When I talk about wealth building, these are the things I'm talking about. Maybe just spending some extra time with your family. I'm not saying Lamborghinis and mansions and yachts aren't nice and cool things. I like all of those things as well. But why don't we start here first and then work our way up to those things? Let's learn, trade, and profit together. We got to have a very candid conversation here today. If you have a stock market decline like this, a lot of people start to freak out. A lot of people start to panic. A lot of people don't understand why this is happening and when is it going to end. A lot of people start to feel like the stock market's going to go to zero. And I'm telling you now, the stock market's not going to go to zero. So you don't have to freak out about it. You've got to just understand and get yourself educated and understand why the market's going down. And there's very specific reasons why the markets went down as much as they did today. And has a lot to do with what I said at the beginning of this live stream, which is I believe we have just entered the second phase of this stock market sell-off. And that's what we're going to be talking about. I'm going to start off this live stream with an open floor Q&A session. I'm actually going to bring on my business partner and co-founder of True Trading Group, the man behind the platform that is True Trading Group, the man that is responsible for bringing all the tools and resources that our members have access to at no additional cost onto the TG platform so that our retail traders and investors can make better informed decisions by having access to the same tools and information that professional traders use to help them make better decisions. So I'm going to bring on my business partner. You guys can all give him a huge warm welcome, a big Ayo. Everybody welcome Adam, or what we call TTG Shug. You got to turn your mic on before you come on, though.
Sorry. I'm not as good as you at this. What's going on, man?
Hey, man, it looks like you had a funeral?
I am at a funeral. I am. I caught a ride with Jay Powell.
You and Jay Powell at a funeral?
I caught a ride with him over to the funeral. It's for the NASDAQ, in case you couldn't tell. He's just posing right now. I mean, he's just, it's what he does. Big time celebrity now. So
crazy day today, bro.
Insane. And then, right after this, got to make sure that I get to my job interview over at Target.
I don't know. They might not be hiring anymore based on their earnings report from today. So,
I mean, maybe, but in the same breath, I mean, pretty sure I got the job. I mean, this is my team right here.
Wow, look at that. Wait, I want to just catch that comment from Zone.
I know. I actually wrote it down earlier. But go ahead.
Wow, look at that. In January, I moved my 401k to a fixed 2% account after watching your videos. Wow, this saved me a lot of money. Do I move it all back into a regular 401k account, or do I pick the stocks? First of all, Zone Trader, I'm so happy for you. Congratulations. All of my TGG members that were with me at the end of last year, 2021, I told everybody very publicly that I believed the stock market was going to crash in 2022, and I was selling in my long-term portfolio at the end of last year.
A lot of crap for that also.
I caught a lot of crap for that, and everyone's like, oh, okay, fine, man. I'm always going to tell you guys exactly what I'm going to be dealing with my money. I've gone through these things before. I traded during 08, 09. I've seen this stuff before. And I said, I'm getting out. I'm taking profits at the end of last year, and it saved us a lot of money and a lot of my members a lot of money. So my TC fam, all of you, seriously, and even if you're not a member, and even if you just watch these live streams, I was very, very vocal at the end of last year that I was taking profit in my long-term portfolio. I'm very glad that we did, because now I've got a lot of cash on the sidelines and I can step in and I can buy a lot of the companies that I sold at the end of last year. I get to buy them back at significantly lower prices. So just my hat's off to anyone that fought along with Zone Trader. Now, for Zone Trader, when you're going to be getting yourself back in, listen, I wouldn't, if you're not going to be doing this actively, I don't think, you don't have to go and pick individual stocks. If you got a 401k that you have that gets managed at your employer or whatever, you can just dump it back in there and then maybe take a smaller amount of money and start picking on individual stocks. But I think there's nothing wrong with you just going into a very well diversified 401k plan if your employer's got one. And then if you want, you can put smaller amount of money in some individual stocks, because getting into individual stocks, yes, gives you higher potential reward, but it also gives you higher potential risk. Okay. It's very rare that a diversified portfolio is ever going to go down 60%. Okay. But you could have just bought Netflix or PayPal, okay, or any of these other Coinbase or Robinhood, and you could be down 60, 70, sometimes 80% on an individual stock. So rather than take that risk, spread it out, diversify.
All right. Pull up your chart, please. All right. So you want to take some questions? What do you want to do? How do you want to start this? Because I think it's important that we have a real candid conversation on here for people today.
I think, you know what? I think maybe why don't I break down what happened and what I think the reason was why the stock market sold off the way that it did, and then explain what I mean by the phase 2 or stage 2 of this sell.
Yeah, because, this is, I was going to ask you about that. For those that don't know, even at the expense of not getting signups, Mike, do I hold back on my questioning to you?
No, not at all.
Okay. So, yeah. I have never heard you talk about phase 1, let alone phase 2 of a sell-off. So I don't know what you're talking about. I'm not sure if anyone else knows what you're talking about in here. How many phases are there? If now we're talking about phases of a sell-off, what does that mean?
Well, it doesn't mean that every sell-off has multiple phases. What I'm referring to is the market's trying to price. Don't forget, the market is a discount mechanism. It tries to discount where we are going to be 6 months at least into the future. Okay. There's a lot of things right now in 2022 that are problems. And there's a lot of things that the stock market has been worried about. But the market, in my opinion, to start the year, January and February, and then again in April, was really and Mohamed Alarian was on CNBC today, and I agree with Mohamed Alarian. There's a couple of people that I value their opinions pretty greatly. It's Art Cashin, Tom Lee, Mohamed Alarian, Dan Niles. These are people that I really, really value their opinions and their input, and people whose opinions tend to line up with my own as well. And I agree with what Mohamed Alarian was talking about today. And that's that in the beginning of the year, this sell-off that we've experienced, this first 18% decline in the S&P, this first, 26, 28% decline in the NASDAQ was a decline based on interest rate fears and monetary policy tightening. Okay. Where the stock market was pricing in the Federal Reserve's monetary policy plan for 2022, which is increasing interest rates and reducing their balance sheet and getting very hawkish and getting very aggressive with their monetary policy. And the markets did a good job of pricing that in. It's not a surprise that the Fed is raising interest rates. Everybody knows the Fed's raising interest rates. We're going to get a minimum of 50 basis points in June. Literally, the whole world knows that. That's not going to be a surprise when you get a 50 basis point hike in January. And we might even get a 75 basis point hike. I think we get 50, but that's not a surprise. The markets have priced in because the Fed has done a great job of forecasting what they're going to be doing. They've been very clear since January. This is what we are going to do. And they've been doing that. And that worked. That's why Treasury yields have gone up as high as they have. That's why interest rates have already gone sky high. That's why you already have the 30-year fixed mortgage up at 5.5%. These things, like monetary and financial conditions, have already tightened. So we've priced in a lot of that financial tightening. What you experienced today was a new phase of concern. And that new phase of concern is not financial conditions tightening. Now it's a growth scare. It's the fear that the economy is now going to be slowing to a point that is lower than what people initially were talking about earlier in the year. And that's a direct result of what you saw out of Walmart yesterday and Target today. These are two consumer staple companies. Consumer staples are an area of the market that tend to outperform when you have recessionary environments, because these are areas of the market where people are, no matter what's going on, they still got to go to the store and they got to buy groceries. They got to buy, toilet paper. They got to buy napkins. They've got to buy laundry detergent. They've got to buy all of these. They got to buy Tylenol. They got to buy all of these things, right? You still have to do that. And that's why a lot of times consumer staples are looked at as defensive. Well, consumer staples got absolutely slaughtered today. All right. Now, there's good things and there's bad things in here. All right. But what happened with Target, and this exact same thing happened with Walmart yesterday, was their margins are compressing drastically. These companies are not able to pass on the increase in costs that they are incurring. They are not able to pass them on to the consumer as much as they were earlier in the year. When inflation was still rising earlier in the year, a lot of companies were passing on those rate increases onto the consumer, and the consumer was absorbing them. Now, Target and Walmart, which are two of the biggest retailers on this planet and two of the most well-run retailers on this planet, both CEOs were like, yeah, we were blindsided by the rising costs that we have incurred and the supply chain issues that we've incurred. And they're not able to pass those costs now on to the consumer like they were earlier in the year. So now when you have a company like that cannot pass rising costs onto the consumer, because if you raise costs anymore, the consumer is going to have to start buying things. That puts a company in a real jam where they just have to just accept that we're going to make less money now. Our margins are going to decrease. And a lot of the main factors that went into this were rising freight costs, rising transportation costs. Any of my truckers out there, you know how much it costs to fill up a truck. I'm talking like a long haul truck that runs on diesel fuel. Diesel fuel is insanely, you think you pay a lot to fill up your Honda? Huh! Go check the price of diesel fuel. So all these transportation costs, freight costs, also wage costs, okay? Target, Walmart, all these companies, because of the labor shortage, have had to increase their wages in order to attract employment. Right now, there's 2 open job positions for every 1 person looking for a job. In a normal environment, okay, you're looking at this and you're saying to yourself, all right, well, isn't that a good thing? That's a good thing, right? When hey, 1 person's looking for a job, they got 2 jobs. But what happens in this environment is that it keeps inflationary pressures high because you now have to pay more money to attract that 1 worker. That's what Target said that they're dealing with. So wage expenses, fuel costs, transportation, freight, and all those things. So what happened today?
Hold on a second. Do you think do you think Target is struggling to find people? Yes, because there's a labor shortage, but maybe also the fact that when you think about a career path, the first thing that doesn't come to mind for most people is, fuck, I better hop on that Target path I better go apply for a job at Target. I'm just saying, let's be real for a second. If times were, if it was, if everyone was desperate for a job before and people aren't, I don't know.
No, I don't.
Okay.
I don't, because it's not just Target. It's in the American economy. There's 2 open job positions for every 1 person looking for a job. That's not something that's specific to Target. That's the entire U.S. job market as a whole. So that's the labor. That's where the labor shortage is. The labor shortage is not just at Target, where Target can't find employers.
Did you explain? Did you get to the part about the sell off in parts? Like, this is the second part of the sell off or something?
Yeah, that's what I'm getting. Yeah, so that's kind of that's what I'm getting at. So I'm explaining kind of. So what happened today was, now people are starting to say to themselves, okay, well, now the market sold off today, not because of rising interest rates, not because of the Fed tightening their monetary policy, not because of the Fed, running off their balance sheet, not because of the Russia-Ukraine war. The market sold off today because of a growth scare now. So you went through your first phase of your sell-off. This first phase of your sell-off was monetary policy is tightening, interest rates are going to be rising, therefore valuations and everything have to come down, which means stock prices then have to come down. That was phase 1. We have now, in my opinion, just entered phase 2. Phase 2 is where the markets are going to begin selling off on a growth scare, which is the possibility of there being a recession. People are going to start, the market's now going to start to price that in.
Is there a phase 3 or 4, or is it just phase 2 and then we're bottomed?
I think there's phase 2 and then we've bottomed. So
okay, so we're not going to come back on here and talk about phase 3 and stretch this out.
I don't think so. No, I think that because this is the whole story behind the economy. You have inflation, high interest rates, okay, monetary policy tightening, balance sheet reduction, liquidity being taken out of the system, and that caused the initial 20% decline in the S&P. Or we didn't actually get to 20. We got like 18% decline in the S&P, was based on that. Okay, but the markets really were never pricing in a real possibility of a recession. I've been saying for the last several months that I believe that we are going to have a recession, whether it's this year or next year. I believe that we are going to have a recession in the United States and around the world, but I don't think it's going to be very, very deep. But I do think that you're going to get some type of a recession.
Yeah.
Okay.
So,
now,
all right, go ahead. I have follow up to this. I feel like this is a lot of stuff we've said before, and it's gone on for. I mean, look, your answers are great, obviously, as always, but I do have some follow up about some of what's happening here.
Okay, yeah, I mean that's.
So I mean, with all due respect, man, like, we talk about this all the time. Everything you're saying is stuff that we've been saying for a while. My question to you is with specifically regarding today. You're talking. For those that. We said it in chat. Mike and I had a really long conversation for about an hour today, right? And as far as like macroeconomics and overall, economy and stock market and everything, Mike is my go-to. All right, there is nobody that I hold in higher regard than Mike. I'm nowhere near on that level, right? The reason that a lot of our members like when I come on and ask these questions is because I ask a lot of the questions that maybe those members or those people are thinking about, right? So, I'm listening to you and I'm listening, and obviously I produce these live streams with you every night, and every night we talk about this opportunity, and I'm listening to you talk now, and I'm thinking to myself, I'm like, shit, gas prices are $5 a gallon. Hot dogs are $20. It's like 50, it's $20 for a glizzy. Energy prices are sky high. All this stuff, right? That does not scream to me opportunity. None of that screams to me opportunity. I don't care if I can buy Amazon at like 20% less. None of that screams opportunity. All I want to do listening to you during this thing is run to the bank, pull my money out, put it under my mattress, and then a couple of years.
And then a couple of years from now, we're going to look back on this exact same moment, and you're going to kick yourself in the freaking ass, just like you did after the 2020 COVID crash, when I told you to open up your pockets and buy everything that you could, and you didn't do it, and now you regret it. And every single person that's on this live stream that's thinking that exact same way that you just said right now is going to look back from this exact moment, just like they did in every single other previous stock market crash in history, and they're going to hate themselves for not taking advantage of it. Because when stocks go down...
But dude, hang on a second. This is a little bit different, no?
No, it's not.
Explain that. I don't understand how this is...
Why is this different? Why is this different? Every single time the stock market crashes, I hear from people, it's different this time. And guess what? Every single time, it's not. Every single time in history that the stock market has gone down, every single time since the stock market was ever created, and it's gone down 20, 30, 40, 50%, guess what? Within the next couple of years, the market was back to all-time highs. And every single time before that, I hear, this time it's different though. It's not. It's different in the reasons why the market has gone down. Yes, every single time there's different reasons why the market goes down. Every single time. But the main constant amongst every single stock market crash in history is that within the next few years, we're back to an all-time high.
All right, so I got a real question for you. Somebody in chat, I forget who it was, but I saw the comment a second ago. This person, I don't think is a member, is saying, I was going to take some money that I had and I was going to pay off the balance of my home, but now I'm thinking about putting it to work in the markets. You would look that person in the face and tell them that's a good idea.
Yes.
Right now.
Yes.
Without just no hesitation.
Yes. Because I believe that the percentage return that you can generate, okay, on investments over the next couple of months, because that's when I plan on stepping in here over the next couple of months, I believe that the percentage gains that you can generate over time can outpace. I don't know what that dollar amount is or what the interest rate is on the mortgage that you're paying. But you got to look at what's if you're looking about paying off the rest of your mortgage, that means that you're obviously looking at your mortgage is you're probably towards the end of your mortgage. Look at what the remaining interest is on your mortgage. And then you look at what the possibility of percentage return of investing into the S&P when the S&P is down 25 or 30%. Think about where that investment will be 5, 6, 7 years from now versus the interest that you're going to save on your mortgage. You've got to do that calculation. But if you're looking at paying off your mortgage, then you're looking at probably a very, very small amount of interest that's still left on that mortgage. So yes, I would say that to that person. Now, if you just got a mortgage today and you're like, oh, I just got a whole windfall of cash, I'm looking to pay off my mortgage. Well, then maybe that's a little bit different because the interest rates are a lot higher and you still have an insane amount of interest left on your mortgage. So I would say that to that person.
Mm-hmm. All right. So basically the big opportunity still remains that you're going to be able to hopefully have enough money because inflation is going up. So hopefully to have enough money as inflation goes up to buy whatever, I know we can't predict the bottom, but as we get closer to the bottom of this or whatever, right? That's what we're talking about now. Okay. So, it's there. What kind of upside potential? Look, I don't know because I don't, I don't, I'm not set up the same way that you're set up in a long-term portfolio, the same way that you are. My question is, how much of a return are we really talking about? Like if you go back to 2008 or the 2020 crash, I'm not just talking about the SPY. I'm talking about like other companies, right? Because not just buying the SPY, but like if you bought, let's say you bought Amazon in 2009, or I'm just throwing out random stuff, right? But like Amazon in 2009 or Google in 2010, things like that. Where would we be? By the way, your screen is frozen. You have to reshare your charts. I don't know why it keeps doing that, but it is.
So let me show you. Now, you also picked two of the greatest tech companies who have ever been
All right,
created.
so give me something. So give me a crap one. Give me, or not a crap one, but one that's a little bit more middle ground. It
Here,
doesn't
I'll
have to
show
be
you
Google or
on Amazon. There's 2009, and there we are now.
Do it again.
So there's 2009, and here's where we are now.
Got it. And where was the COVID crash?
Oh, no, right there. This is the COVID crash.
Do you think we're going to surpass the low of the COVID crash? I mean, it looks.
I do not.
You do not think we're going lower than what it was during COVID for Amazon?
Meaning, do I think Amazon's going to go below $1,600?
Yes.
I do not.
Yeah, and guys, look, Mike nor myself are licensed financial providers, right? We're just having a really candid conversation with you guys because we feel like it's probably something that's beneficial. You know, I mean, maybe show me some other examples. I mean, I don't know, like, you know, I don't know what the percentage gain is on that. I mean, it looks great on a chart, right? I mean,
yeah, man. I mean, listen, that's why I like to talk about in terms of the S&P, because, you know, obviously you're going to have individual stocks. I mean, that story will change depending on what stock you're looking at. You know, there's some stocks that went down. You know, there's some stocks you go back and, like, you know, I can just show you a Peloton, and you say, well,
forget Peloton. I mean,
look, but I'm saying, but there's the 2020 crash. There's the COVID crash.
There's a look. Anyone that thought that the growth that Peloton had over COVID was something that was real or sustainable was naive.
Their CEO. Who?
I don't care who it is.
I know. Worst management that I think.
You know, it's naive. It's naive, and you know what? You shouldn't have been. You know, it is what it is, right? It's not my company, right? I guess I'm just trying to figure out, like, you know, you know, we come on here every day, and our first responsibility is to the people that watch us and to our members. You know, you and I know how to make money, whether it's with True Trading Group as a business or 50,000 other ways. My question is, what's happening now? Do you feel like this is going to get a tremendous amount worse, and then eventually this buying opportunity and all this other stuff kind of evaporates, and then it just becomes like where it's just all out chaos, or like the end of the world, or what are we looking at here?
No, I don't think it's the end of the world at all. You know, the end of the world, you know, don't ever bet on the end of the world. It only happens once. So I like the odds to not bet on the end of the world. You know, I think this can and will get worse. I've been saying that I think the markets go lower, but what I'm saying is the lower the markets go, the more excited I get. You guys have to realize, like, these companies that we were able to buy in 2020, I mean, these companies are companies that I want to own for the next 3, 5,
I mean,
7.
I will give it to you. I doubted whether or not to buy in 2020, and I do regret it.
Hey, but and think about the reasons why. Right? Everyone thought the world was ending. Like, the
you didn't know what was going to happen. Nobody had ever seen anything like that before.
Right.
You know, nobody had ever seen the economy get shut down, because, I mean, it was literally something out of a zombie movie.
Exactly.
If you pen a zombie movie, that is how the COVID pandemic started.
Yes.
You know, everyone was freaked out.
Yes. And with that, guess what? Here we are today. The world is still here. The world is still here. The U.S. economy is still operating.
Think that we were going to have such a rally in 2020 right after that crash?
No, I didn't think we were going to go back up as quickly as we did. No.
I mean, dude, it was everything.
Literally.
and so many things that didn't deserve it.
Oh God, yeah. There were the reasons why a lot of things went up in 2020 and 2021. It was free money. That's why everything went up. You had trillions of dollars of absolute free money, and what you're seeing now are the results of free money. When you generate money without productivity, you end up in the situation that we're in today. When you generate money,
what do you mean by that?
When you generate profit and you generate earnings and cash through productivity, meaning you've done something to earn that money, you've created something, you have provided some type of a service in order to get that money. That is a good thing. That's productivity. Profit from productivity or cash from productivity is a good thing. That's economic growth. During COVID, the entire world shut down, and governments around the world just gave free money with zero productivity. This is why we are in the situation.
And they were productively hodling after they got that stimmy, bro.
They were. That is why we're in the situation that we are in today. Okay, when you give out trillions of dollars, and I'm not just talking about, because there's two different types of stimulus. You had monetary and fiscal. Fiscal stimulus is what the governments did, sending out $1,200 checks, right? That's, saying you don't have to pay your rent. You don't have to pay your student loans. That's fiscal stimulus. That's stimulus from the government. Then you had monetary stimulus, which is from the Federal Reserve and central banks around the world, which is where they stepped in and said, we're going to buy $120 billion every month of stuff, right? A bunch of different things. They bought bonds and mortgage-backed securities and treasuries. They bought a bunch of stuff, okay? Not to mention injecting liquidity into the overnight repo markets, and the list goes on and on and on and on. Trillions of dollars, trillions of just free money with zero productivity to back it up. And that's how you end up in the situation that we are in today. So all of that is getting unwound. I call this the COVID bubble. Okay. That's what's happening. The COVID bubble, all of that free money, all of that just nonsensical valuations, because all that free money caused valuations and everything to absolutely skyrocket. And now all that free money is causing, and a whole long list of other things, a lot of things adding to inflation. It's not just one thing. That's the reason why inflation is so high and it's so sticky, because there's so many different things that are affecting inflation, and none of them are going the right way right now, except, mortgages and car loans are heading in the right direction. But energy, food prices, wages, all that stuff is not going in the right direction. That's why inflation is still so high. And that's the reason why.
Yeah, but the CPI numbers that came out, you explained this to me really well earlier. The CPI numbers that came out that were still high, they were hot, that came in, right?
Mm-hmm.
Explain to me what happened, because I thought, even though it came out a little bit over what they thought it was going to come out, it was still under what it needed to be. So why isn't that a sign that inflation is slowing or getting better from what the Fed has done? Why wasn't that received better?
Because inflation, you have to understand what inflation is. Inflation is a rate of change. Inflation is not a price. If inflation was a price, then what the last CPI number was actually good, because it went down. But it's not a price. It's a rate of change. So if you have a situation where inflation is up 8% year over year, that means that prices today are 8% higher in general on average for things 1 year ago. If your next reading is inflation is 7% year over year, let's say next year inflation is 5% year over year, that means that prices have gone up 5% from the year prior. So if today it's 8% year over year, that means we're 8% higher than 2021. And then in 2023, if inflation is 5%, that means we're 5% higher than where we are today. It's a rate of change. So even though inflation is slowing down, that doesn't mean prices are going down. That means that prices are going up at a slower pace. Still bad. Prices are still going up. They're just not going up as fast as they were.
But isn't it a sign that things are? I mean, who thought that this was going to get better in the first 2 quarters of 2022? Like, who thought it was going to be substantially better in the first 2 quarters of 2022?
People that aren't paying attention, because I told everybody in December, we're going down in 2022. Go watch my live streams from December. October, November, December, I told everybody 2022, I named it the year of the active trader. And I told everybody that retail active traders have a chance to drastically outperform the greatest hedge fund managers of all time in 2022. That's exactly what I said at the end of 2021.
I mean, honestly, though, when you started saying that, look, I don't, if I ever actually question you, I usually, I'll do it privately and be like, hey, man, you really feel good about this? When you were talking about this is the year of the active trader, I was like, and then the market's going down, I was a little like, all right, like this guy, he's got a lot of experience. I mean, look, you learned how to trade professionally during the greatest financial crisis we've ever seen.
Look at Lakeisha's. I'm sorry, Adam, but Lakeisha goes, he did say it, and I put my son's 529 college fund into savings mode. Thank you so much, Mike.
Oh, that's awesome.
My pleasure. My pleasure.
So, so obviously you have an idea of what you're talking about. Like that's, if you knew nothing else about the person that's speaking with the New York Yankees hats on, you learned how to trade professionally from a hedge fund in New York and thrived during one of the worst financial crises that we've ever seen.
Yes.
So managing tens of millions of dollars. So my thing here is that, you've seen stuff like this before, right? You've experienced it. This is where you learned how to trade. So even though I was a little concerned, I got to tell you, man, looking back now that we're in the second quarter of 2022 and seeing what we've been able to accomplish inside of True Trading Group as a group and community, I mean, it's kind of unreal.
Yeah, man.
I mean, honestly, I mean, if you're a member of True Trading Group and you're in here, you know exactly what I'm talking about. I mean, maybe you want to go over a little bit about what that is. I don't need to, brag for you, but I mean, you were really spot on.
Yeah, man. I mean, listen, I always shoot people straight. I always give them my absolute honest opinion on different things. Some people hate me for it. Some people love me for it. Some people, if they don't agree with what I say, they automatically get confrontational for whatever the reason. I don't know.
It's very simple. People want confirmation bias.
Yeah.
It's if you make up your mind and you invest into something and you think that you're right, well, now your hard-earned money and your investment is there. Anyone else that tells you different is literally a threat. It doesn't mean that it's rational or okay, but that's what it is.
Yeah. Listen, I come on, I'm always very forward with what I think the market's going to do. Like, case in point, last Thursday, I told everybody on Thursday, on Friday, on Sunday that I believe the markets were going to bounce. And I got into call options. We made a lot of money in the last 3 days in call options. Okay. But I also thought, and I said this yesterday, I thought that that this bounce that we had was going to last a little bit longer. I thought maybe we got a couple more days of this bounce. Okay. So I didn't think the markets were going to do this today. I also didn't expect Target to come out with just an absolutely horrific earnings report that just scared the entire market. So we were actually fine today. The S&P was pre-market was totally fine. We were like break even. We were not very far. We were slight teeny tiny red. Okay, teeny tiny red. Then these earnings come out and it's like, whoa. And then the market just started going down pre-market, and then the bell rang and the markets went straight down the whole day. There was no bounce at all anywhere. It was like you look at the SPY today. All right, I'll just pull up a chart. Look at this. This is the SPY today. Really? Where's the bounce? There was none. The market, we opened and went down. Now, to put things in perspective, pre-market, you want to know where the SPY was? Right there. That's where the SPY was pre-market. Right there. And then everything fell apart. And it's a new fear. I'm telling you, this is not a sell-off today. Nothing changed from Jerome Powell. Nothing changed from the Fed. We didn't get any inflation data.
Your screen's frozen again. You got to refresh. When I come up to see you in June, I'll fix it. It's an update that needs to run on your computer.
Okay. Sorry, guys. But no bounce at all in the market. And today it wasn't inflation. It wasn't the Fed. It wasn't Russia. It wasn't any of that. It was the biggest retailers on this planet, Walmart and Target, back to back, horrific earnings. And that took a lot of people by surprise.
Hang on one second. We got a comment in here from somebody that
is it a D-bag comment or is it a good comment?
It's just a comment. It's a little ignorant, but it's not too bad.
Not surprised.
The Shoe Hustle says you made a bunch of money the last 3 days, but what about today?
Yeah.
And then you had a couple of other people saying like, responding to it. And then that same person responded with something like, that's good. Just asking to be transparent on both sides.
Oh yeah, I said that the first thing I said when I came. So here's the deal. I've been in call options the last couple of days. Okay, we took a lot of profit. So I was in 2 different call options, and I told everybody this in the live streams. And I have no problem telling you guys whenever I make money, lose money, winning trade, losing trade, right, wrong. I tell you guys. So call options the last couple of days, ever since Friday, I was in the 402 strikes. We got out of that completely. I got into them a couple of days ago. We got out of those completely for about 45% gain. I was also in the 406 strikes. We got out of the bulk of those positions on the 406 strikes. The 402s, I was completely out. The 406s, I was out like 75% of my position was already out for like a 20, 24% gain. I still held a small piece of that position into today. So when the markets opened, obviously now I'm red on the piece that I was still holding. So I exited those call options today at the open. I got flat those. I lost money on those, but I'm still overall net profitable on the trade because it was a small piece of the position that I still had. So over the last 3 days, I had been selling those call options for profit. I held on to a piece. I expected more today. I didn't think Target was going to bomb on earnings like that and just ruin the whole party, right? That's what happened today. If Target actually beat earnings, the markets are probably sitting around 411, 412 today on the SPY. You're not down at 391 if Target beats on earnings today. I promise you that. Target's earnings cause a whole nother fear in the market. And that fear is a growth slowdown and the possibility of a recession beginning to increase. Everything that we've heard for the last several months was the economy is strong, the economy is strong, the consumer is strong, the consumer is strong, the economy, the consumer, strong, strong, strong. Well, now you're starting to see from Target, from Walmart, well, maybe that's not necessarily the case. And that's why the market sold off today. Right? So, but it doesn't matter that the stock market's going down. It doesn't matter.
Hang on 1 second before you continue. I want to read a comment here. You're going to love this.
Okay.
Remember Day in the Life of Perfume? Yeah. Earlier this week or last week, they blew up their account. They were saving to join Shoe Trading Group, right?
Yeah, right.
Finally joined. right?
Right.
Check this out. Hang on. I just saw it. Boom.
Shut up. Oh my God. That's a day in the life of perfume. That's absolutely incredible. Oh my
Also
God.
not the norm. It's also not the norm, to be fair, but it's
Right,
very
true.
nice.
To be fair, that's not the norm. It's not normal to double your account in one day, guys. Let's be. That's definitely not.
But it's
normal.
cool nonetheless.
But that is, it still shows you what's possible, and that is incredible. And I'm really happy because this is a new member.
I just think it's a nice. It's a new member that blew up their account and thought that they weren't going to be able to participate.
Right. Yeah. Someone that And to be clear, they didn't blow their account up with us. They blew it up before they joined.
Glenny said, "How do you double it?" Not following Glenny.
Glenny had a
I know. I just like giving Glenny a hard time.
I know. Glenny had a good trade. For those who don't know who Glenny is one of our mods in True Trading Group. He had a great trade on Sunrun, ticker symbol RUN. I don't know where the stock is now, but he bought it a few days ago and took some profit off on it. I'm not sure where it is today, but guys, listen, the point is also, though, that it doesn't matter the markets are going down. Okay. You can still make money. You can still profit during this environment. And that's what teaching members are doing. You just, getting educated to learn how to take advantage. A lot of people think when the stock market crashes, there's no way to make money. And it's so wrong. There's so many members in TGG that are actually having their best years ever, best months, best days because of the volatility that we're seeing here. Guys, do me a favor. If you're a member of True Trading Group, are you making money during the 2022 stock market crash? Yes or no? Sound off in chat. Are you making money during the 2022 stock market crash? I want you guys to sound off in chat. Members only. I'm just talking to members right now. If you are a member, I want to know if you guys are making money today. All right. Well, not just today, but in general, like during this crash in 2022, are you guys making money? I want to know. And I think a lot of other people want to know. There's so many people that are probably watching this live stream that are probably completely crapping their pants, and they don't understand how it's possible for people to make money during this. Guys, I'm telling you guys, we've been making money on put options all year. I was in call options for the last couple of days. I did not get put options today. Trust me, I tried. I tried to short this market today like 3 times, and every single time we never got into the areas that I wanted to short. So I'm a conservative style trader, which means I like to buy pullbacks into support, and I like to short bounces into resistance. The market did not bounce at all today. It just kept going down, 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 down. So I let the trade go. I didn't chase it. And I'm just going to wait for another setup here. Tomorrow's a new day, and then I'll go after it at that point. But you guys can see all these people that are commenting in chat. Look at all these people that are commenting in chat that are telling that they're making money during the stock market crash. Just read some of these comments. These people that are typing this, there's no difference between these people and any of you that are watching this live stream. I'm telling you guys, a lot of people don't know or know how to trade put options. Learning how to trade options, you don't know, don't worry about it. We'll teach you. Okay, we have options courses. We've got moderators that have over 20 years of experience.
Real quick, Joe, post the syllabus in chat.
Yeah, there you go, guys. Yeah, we'll post
go ahead, Mike. Go ahead.
We'll post the syllabus right now in chat. So if you guys want to see what you'll learn as a member of TTG, you guys can see what all the different courses, the titles, and the topics that you're going to cover. And again, full transparency. Not every single member. We have about 9,500 members.
We had I counted like 6 or 7 people that said no when you asked the question.
Okay, there you go. Those 6 or 7 people said no. That are not making money, and that probably works out to be, pretty average.
And what do we do for the people that aren't making money? Do we, or the people that are struggling? Do we just say, hey, we got your fee for the platform, so pound sand, or we do something else?
Right. No, guys, when you join TTG, we actually give a damn whether you succeed or fail. So not every member's making money. Not every member is doing well. It's important. It is very important to, as much as we congratulate people like the day of perfume that doubled their account, it's as much as we celebrate the people that have success, it's equally as important to recognize the people that are struggling. And we do not have 100% win rate here, 100% success rate. That's not possible. But for the members that we have in True Trading Group that are that are still struggling. We hold what we call red to green workshops, right? Red to green workshops are where any member that is still struggling is able to submit questions and topics to us that they're having a hard time with. And then the moderators and I will host 2-hour long workshops covering those topics specifically to give those people the help that they need. And it's completely free. We don't charge people anything extra for that. If you join to a training group and you are not having success, there is help there for you. Okay. There's
no different than if you go to a university and you're struggling with your classes, there is help for you there as well. That is what, look, I mean, Michael will be the first person to tell you, and I'll let him elaborate on it because he can do it better than I can. But this industry sucks.
This industry's terrible.
And I'll just let him run with that for a second.
Yeah, this industry is terrible. And when I say this industry, I'm talking about like online stock market education or courses, whatever. The industry's terrible. There's so many people that literally don't know their ass from their elbow. That claim to have discovered some secret by, spending years in their mother's basement looking at, something secret that they found some kind of special equation to unlock the keys to profitability in the market that no one knows about, but they're going to tell you if you give them $5,000. It's complete nonsense. And then these places will literally just market to you that, and 30 minutes a day can keep the job away. And I made 10 grand in 30 minutes. Let me show you how. And with just 10 minutes a day, you can make $500 and blah, 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 blah. It's silly. It really is. But that's what's out there. And a lot of people that they'll communicate with you every single day. Every day they're going to email you, they're going to text you, they're going to call you to try to convince you to join. And as soon as you join, you never hear from them ever again. And then when you reach out to them, it takes 2 weeks for someone to get back to you. That's the exact opposite of True Trading Group. We don't bug you. We don't bombard your email inboxes. We don't text you or call you nonstop.
Hang on. In all fairness, when you sign up, we do send you like crazy reminders for these live streams.
Oh, I'm talking about when you're not a member, I'm saying.
Either way, we're going to bombard you with emails for these live streams.
Yeah.
So I'm just, let's call a spade a spade. But as far as emails and spam to get you to pay more money, no.
Right, exactly. But, the point that I was making is that a lot of people, you'll get emails from people to sign up. Once you do, you never hear from them again. With us, it's the opposite. Our relationship begins the day you sign up, and you guys have access to, myself and the other moderators and Adam and the rest of our support and our help staff. But you also have access to members, and the members in TTG are just so phenomenal. You guys and girls have done such an amazing job of just maintaining such a camaraderie type of feel and environment and atmosphere inside a True Trading Group. And I think it's really important for people because trading can be tough. Trading can be lonely, and to have
trading is tough, especially right now.
Yeah.
You can't, in 2021, my daughter made money in the stock market. She's 6. I mean, now.
She's 6.
You could throw $100 at any stock in the S&P and you could have made money in 2021. It wasn't real.
Yeah.
This is, everything's coming back down to earth, but guess what? This is still the best game in town.
Hell yeah, man.
This is still the best game in town.
Hell yeah.
So I sometimes give Mike a hard time when we go over these questions and stuff, but I know that he and the rest of our mods are that good that they can answer it. I know that they can answer it. And I know that if somebody types it in chat, some of the things that I'm asking, it may come off the wrong way and people get defensive. But if I go ahead and I push Mike on some of these things, I know that he's good enough to answer the questions for real. So that's why I do it. I see people say, oh, you're being mean. No, I'm not. I know that he can answer the questions. And every once in a while, Mike, ask how many people are new here real quick. I have a point to prove.
Guys, how many of you are not members? If you're not a member of True Trading Group, just type the letters TTG.
Please, I have a really good point. I just want to see how many people on here are not members. Type the letters TTG in chat for us.
Yeah, real quick. Just type TTG if you're not a member. I think it'll help us kind of get a gauge here. Might sound silly, but it'll be helpful. All right, we got Andrew, Linda, Linda. One of these days, Linda, you're becoming the Dave Norby of the group. We got Doob, Mandy, Sharm, Devon, Sammer, San, Rockin' Rozzy, Yoda, Chester, Brian, OCD, Garner. Great guys. Bill Lupin. We got a lot of people here that are not members of the TTG fam.
Okay. For those, Dave Norby has not signed up yet, Ragu. But here's the deal. For everyone that's watching on here, we come on here. What's up, Gusher? We come on here every night and we talk about memberships. We talk about, Mike, Mike sticks his neck on the line every night on here. Okay. And it's important that every once in a while we get a break from that same conversation. Not that it's not valuable. It's valuable. And it provides a great benefit for people that are on here. Okay? However, it is also very important to have these conversations where we can say like, hey, you say there's going to be this great opportunity. Well, why do you say that? Is that just something that you're reading off a script? Is that something you believe? Are you saying that to get memberships? What is at True Trading Group, we are extremely transparent. So it's important that, especially for the new people in here, that we ask those tough questions in and of ourselves. It keeps us accountable. One of the things that Mike and I decided to do when we started True Trading Group was always keep ourselves accountable. Never view our members as just another sign up or another dollar amount, right? There's a Mike comes on here and he says, you carry the weight of your world on your shoulders, when you give out the trades that you're trading and when you talk about, when you hang your neck out there. It's not because you paid $1,100. I promise you, Mike, it's not because you paid $1,100 to sign up. That's not why he feels obligated. Okay? And it's not why I feel obligated. It's not why our staff feels obligated. Okay? We feel obligated because we understand you guys are real people.
Yeah. With
real families and real lives and real goals. And that's the stuff that we are looking to positively affect. Okay? That's the entire reason True Trading Group was created.
Yep. Amen to that.
The True Trading Group is a business, and trust me, you want us to be a business because you don't want us to treat you like a charity because you're better than that. So I do think that I know for myself, I am going to get myself in a position where I will be able to take advantage of what's to come in this market because yeah, I mean, correct me if I'm wrong, and I'll kind of leave it with this. This is really how wealth transfer occurs.
Yeah. Usually what happens is, and this is not my opinion, this is just historically how the workings of the market have gone. Every single time the stock markets crash, the last people to sell are retail. It's not institutions. It's not professionals. It's usually retail. The professionals and the institutions are selling. That's what starts the crash, right? The best of the best start the crash. Then the rest of the professionals accelerate the crash. Then retail finishes the crash. And that's how it's been. And then guess what happens when retail finishes the crash? It's the best of the best that started selling, that created the crash. They're the ones that step into the first ones to buy. Then it's the rest of the professionals that step in and buy. And you want to know who's last to buy? Retail. Well, that's a problem. Because the way that you make money in the market is you buy low and you sell high. But according to that playbook, retail traders are selling low and they're buying high, not buying low and selling high. Because they sell at the bottom of the crash because they've completely panicked. They think the stock market's going to zero. It's like 08 and 09. 08, 09, the S&P went down like 35%, then started to hover, and then we broke those lows and we went down another 20% or so in 2009. And that last whoosh to the downside, a lot of that was your retail investors finally panicking, breaking their back in the midst of a very deep recession, saying, I can't afford to lose all of my money. And they panicked and they sold with the S&P down 40, 45%. The S&P bottomed in 2009, okay? The S&P bottomed in 2009. And let me just pull up a chart for you guys and actually just show this to you. Adam, if my screen is frozen, just let me know. Okay. Now, I want to show this to you guys.
Yes, it's frozen.
It is frozen? Okay, hold on. Okay, now what I would like to show you, okay, when we take a look here at 2008 and 2008 into 2009, because this is a good example. All right, here's 2008, right? There's the big sell-off that was 2008. The markets went down drastically, right? But then when we started in 2009, the markets went down again to start off the year. We actually were down in 2009. We were down 27% in 2009. Now that's following a massive decline in 2008. But if you just were to look at the beginning of 2009, the stock market was down 27%. To put that into context, the S&P right now, okay, is down about 18 or 19%. We were down 27% in 2009 by March. Well, now it's May in 2022, and we're down about 18%, 19%. By March, we were down 27%. Does anybody want to take a guess on where the S&P finished the year in 2009? Up 20%. Up 20%. Okay, this is 2009. We started the year down 27%, finished the year up 20. Okay? This is what I'm talking about by it's usually the best of the best in Wall Street sell here. The rest of professionals sell here, and then retail sells here. And then the journey then begins again. And that's how it has gone throughout history. You guys, one of the only groups that don't do upsells. Everything is a flat fee except for lifetime, but you guys make it easy. Love your honest business value. Tashana, I really appreciate that. Yeah. I actually have something called morals, and so does Adam, and we take that stuff pretty seriously. And we're truly, trying to build a platform that could really actually help educate, retail investors and traders and hopefully improve, their lives. for them and their family. And that's something that is a passion of ours and something that we work very hard to achieve and attain. And it's something that we're not gonna, surrender our values and our morals for anything. So at this point, should people not sell and just ride this wave? Or do you think there is still time for retail traders to sell before hitting the bottom? Okay. I think people should get educated and invest in themselves and not want and wish that they did that later. Okay. I believe that the stock market is closer to the bottom than we are to the top, which means I believe that the stock market crash that is 2022, I believe it is more than halfway over. So it's like, are you going to, drive halfway to your destination and then turn around and drive back, or are you going to finish going to your destination? I think at this stage, listen, I'm not a licensed financial advisor. I'm telling you what I'm doing with my money. Now, it's easy for me to say this because I sold a lot of my long-term portfolio at the end of last year very publicly on this YouTube channel and within True Trading Group. I'm looking for buying opportunities right now. Between the next 1 to 2 months, I'm looking for buying opportunities. And I'm going to do a huge chunk of buying between now and into July is when I think, because I think the markets are going to bottom in the summer. Okay. I think that between June and August, somewhere
that's like next month. So that's not a lot of time for people to
exactly
get their stuff together to know what they're doing.
Exactly.
How important is it that people take the time now to invest in themselves, learn what they're doing so that they can, couldn't they just follow you in June or July or what? Sounds like you want them to know what they're doing.
Right. Yes. Can you guys just follow everything that I do? Yes, of course. Sure. Because I tell you everything that I'm doing, very open book and fully transparent. But you should know and understand what you're doing. You should get educated to the point where you make decisions that are right for your financial situation. You and I may not be in the same financial situation. You and I may not be at the same point in our lives. You and I may not have the same responsibilities and liabilities, and you might be 3 years away from retirement when I'm nowhere near it. Some people might even be 21 years old, and it's the exact opposite, and they're further away from retirement than even I am, and they want to take even heavier risk than I do at this point in my life. So you have to really still understand that every single person's financial situation is different. And, that's why it's very important for you to understand risk management, proper position sizing, like whether you're actively trading or if you're just focusing on a long-term portfolio. It's very important you understand risk management and like asset allocation and how much money should you be putting into these stocks versus these higher risk plays versus these safer, less volatile plays. Like you really should understand that stuff, because just because I sit here and I say, guys, I'm buying these 10 stocks. Well, maybe for you, you should only be buying a handful of them, or with the amount of money that you have that's investable. Certain stocks are higher risk than others.
Let me ask you a question. How many times has something like this happened where the market has gone down huge and given people the opportunity to get educated and get involved to build wealth, so then they can do other things? Maybe they want to use this as an opportunity, as a springboard to then buy real estate when the real estate market cools off. Maybe they want to use this to start that business that they've always wanted to start. So how many opportunities are we talking about? Is this a common thing?
No.
Okay.
It's really not. When you look at throughout history, the stock market goes up 80% of the time. When you go through history, stock market goes up 80% of the time, right? So you're talking about a very short amount of time in history that the stock market actually goes down. A very short amount of time. So historically, if you go since the market's inception, stock market has done nothing but go up with brief moments of sharp decline. Stocks go down a hell of a lot faster than they go up. That's why it's scary. That's why when the stock market is crashing, it's scary. The stock market goes down 1,100 points in one day. It's scary. It happens very fast. The stock market doesn't go up 1,100 points right? When the stock markets are at all-time highs. When you're in a bull market and the market's going higher, 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 the stock market doesn't go up. We went down 4% today on the S&P. That is insane. The stock market doesn't go up 4% in a single day. During a bull market, the market goes up 0.5% today, 0.7% tomorrow, 1% the day after. Then it goes down 0.2%. Then it goes back up 0.5, then back up 0.2, then back up 0.8, then down 0.3, then back up 0.5, up 0.6. It's boring as hell. But when you look back over time and you say, it's like, oh my God, man, am I glad that I bought. Man, am I glad that I bought at that time. And that's how it's been throughout history. And I'm not going to be the person that's going to say, oh, well, but no. For the last 120 years, this time it's different. It's not. The reasons are different. And everybody says, oh, but we've never had the Fed print all this money before. True. We've never had the Fed print trillions of dollars of money before. You are correct. That's never happened before. That makes this different. But guess what? In 2020, we never had a global pandemic shut down the entire global economy ever before in history. That was a first. 2008, 2009, we never had housing prices collapse the way that they did and see the entire global financial system crumble from within, where banks and financial institutions were too highly leveraged on assets that became worthless. And we were 48 hours away from you going to the ATM machine and the bank saying, I'm sorry, but we don't have your money. That's never happened before. Okay. 2000, the dot-com bubble. Remember Y2K? Does everybody remember how scary Y2K was? We were going to switch from 1999 and all of a sudden the banks were going to read 00 and all the computers were going to break. You guys remember that? The computers were going to break. The banking system was going to break because it was going to turn to 2000. What happened during that time period? The Federal Reserve gave a huge amount of money out. Okay. They gave a huge amount of money out because they thought that people were going to be hoarding cash, because they thought the banks were not going to have their money, that the banking system was going to break. And the Fed thought everyone was going to hoard cash. But what happened? People did not hoard cash. Okay. When Y2K came, they didn't. You know what they did with that free money? They went out and they bought new computers because it was the internet boom. It was a dot-com bubble. And they went and they bought new computers with it. And all of that free money added to all this crazy value, all these crazy valuations that have spiraled completely out of control. You had companies that have never earned a single dollar in revenue, just had a .com in their username. The stock went up 1,000%. Well, guess what? The Fed would then realize, well, no one is hoarding cash. We got to take this money back out of the system. And then all those valuations popped and everything went back down and everything collapsed. And all those companies that had a .com after it, they went to zero. They went bankrupt. 90% of the companies in the NASDAQ in the .com bubble went out of business. That's why the NASDAQ went down so much in 2000 during the .com bubble crash. That was the first time something like that had ever happened. Y2K, that's the first time that's ever happened. There's always a reason that is a first. If it wasn't a first, the markets wouldn't get so upset. The markets don't like uncertainty. The markets love to be able to look 6 months into the future and say with definitive certainty, this is where the economy is going to be. The markets like that. And when the markets can't do that, they throw a hissy fit. And right now, the markets don't know 6 months into the future, are we going to be in a recession? Is the war still going to be going on? Is gas going to be at $6? We don't know. And the markets don't know what to do. But as time goes on, and as all of these catalysts become more clear, it doesn't even matter if the result is bad necessarily. Once the market has clarity on, are we going to have a recession? Once there's clarity, the markets can start to price that in and markets can stabilize and you can actually bottom. Markets crash when they don't know what to do. The stock market is a discount mechanism. It tries to discount 6 months into the future. There's nothing. You want to know what the markets hate more than inflation, than a recession, than a bubble, than a war? You want to know what the markets hate more than that? Uncertainty. That is where we are. And once the uncertainties and the question marks no longer become uncertainties, but become matters of fact, the market will bottom and you will be left with tremendous buying opportunities that you will look back from now. How long does it take for the market to go back to all-time highs? I don't know. Are we going to go back to an all-time high in 1 year? Probably not. It might take us 3 years, 4 years. Even if it takes us 5 years to go back to an all-time high, that doesn't mean that individual stocks can't move higher, that you can't make 20, 30, 50, 80, 100% gains over that time period as stocks like AMD go from, maybe AMD drops to 75. AMD can go to $200 a share 3 years from now before the S&P makes a new all-time high. There's going to be opportunities out there. But you're running out of time because the stock market bottoms before the economy and the global macro picture recovers, because it's a discount mechanism. It tries to discount 6 months into the future. You need to get educated now. You can't wait for everyone on CNBC to be saying the stock market's bottomed, it's time to go long. Because by the time they say that, the market bottomed a month ago. Get educated now so you can actually be prepared, take advantage of the window of opportunity that is there, because the stock market's not going to go down forever. It's not going to go to zero. And you're going to look back 3 years, 5 years from now and be like, shit, I should have listened to that guy. I'm a Red Sox fan, but I still should have listened to that guy. This is what I'm doing with my own money. You guys do what you want with yours. But I come on here to try to educate people, to try to put things into perspective and let you know what I'm going to be doing. I believe the markets are going to go further to the downside. I do not believe the bottom is in, but I do believe the bottom is very close. I think we're going to bottom within the next couple of months. And then the markets, I think, will recover. And I actually believe that the markets can actually finish the year higher than where we are right now. In 1970, in 1970, which is one of the worst starts to a year ever in history of the S&P. One of the worst was 2008. The worst start to a year was 2008. In 2008, we finished the year down 38%. That's the worst year in the history of the S&P. The worst one single year was down 38% in 2008. And then again, I told you, we went down another 27% in 2009. But then we finished 2009 up 20%. 1970 is very, very similar to what's happening now. In 1970, the S&P 500, and we had a lot of the same problems during that time period as we have now. A lot of the same issues. There's a lot of similarities between the 70s and what you're experiencing now. In 1970, by July 13th, the S&P 500 was down 25%. It bottomed in July. Do you want to know where the S&P finished the year in 1970 after being down 25% by July? We finished the year down 0.9%. Let me say that to you again. We were down 25% on July 13th in 1970. By December 31st of 1970, the stock market was down 0.9%. Did we go back to an all-time high that same year? No. But did we go up huge from the 25% decline to finish the year down 0.9? Yes. There's so much opportunity in that. I'm trying to put this stuff into perspective for people that otherwise have not been through this, don't know this information, are not educated enough on it. I want you to understand what's taking place, why the market's going down, how markets work, and why I believe, my opinion, this is a fantastic opportunity. I don't think the markets are going to just V-bottom like they did in 2021 and 2020. We're not just going to go down and then all of a sudden rally back to all-time highs. No, it's going to take time. But the window of opportunity for you to grab some of these names, I believe, is here within the next 2 months.
I have an idea.
What's your idea?
Let's do something special tonight for them.
I hate people like Nisha. So where's the bottom? Oh,
Can you? That's not necessary. You don't know her, and you also don't know what part of the live stream that person's on, because everyone's
talking about it for the last.
I get it, but
well, no, the comment was where's the bottom?
Right. You don't know how the person meant it. I'm just saying.
Well,
look, I'm a complete a-hole, but you can't be. You have to be perfect.
Yeah, I know.
So okay,
I got to play the good cop.
All right. So here's what I'm thinking. Okay. Why don't we do this? There is a lot of opportunity here, and there is a good amount of people that are on this live stream still. Even after an hour and 30 minutes, there's still almost 1,200 people on here.
Oh my! I didn't realize it's already an hour and 30 minutes. That's insane.
Right. So I think what we should do is this. Right now, it's important that people have the opportunity to have this information and this type of community and everything, but also have the ability to have money to trade with. So what we're going to do tonight is, instead of giving away a laptop or doing a small cashback offer, what we're going to do tonight is we're going to get because when you sign up for, Mike, if you want to explain it, right, you do it better than I do. When you sign up for True Trading Group, we usually give a free electronic, a little bit of cash back, whatever it is. Right?
Mm-hmm.
Tonight, the offer that we're going to make you is we're going to give you $200 cash back. And I'll let Mike explain it and go over it. But he and I talked about it before this.
Yeah, I like that.
And essentially what's going to be tonight, Mike will go over it with you, but it will be $200 cash back at double your money back guarantee. Mike will go over that with you. It will be for we're going to open it up for 20 people between now and midnight tonight. If we don't hit 20 people, we'll just close the offer. All right. But go ahead, Mike. You can explain all of that.
Okay. Yeah, I think that's a good idea. Especially in a time like this. And I think, given a $200 cash back offer for someone that's interested in joining the family, so that you guys, feel like you have some extra cash that you can start, getting into the market, whether it's you're trading or you're investing or whatever. I think that's a good idea, rather than giving someone a free laptop. Kind of giving a cash back is something that I think makes sense, and something that we're going to offer here today. So what we're going to do, guys, is the next, you said we got 20, Adam, the next 20 people that go to ttgoffer.com and enter the code TTG121. You guys will be getting, that discount, 48% discount, which is going to bring the price of the membership all the way down from $2,212. It brings it all the way down to just $1,150. Okay. But the next 20 people that go to ttgoffer.com and use that coupon code will get a $200 cash back offer once you go through our courses and quizzes. So we will literally PayPal, Venmo, whatever it is, we'll send you guys $200 cash back, which then brings the price of your membership down to just $950 for the entire year, instead of giving the free laptop. And this way you guys can have some extra cash to invest, or you guys can have some extra cash to trade with, or whatever it is, or some extra cash for groceries, or whatever the hell it is that you want, or you want to fill your gas tank up and go drive down the shore, whatever it is, you guys will give you $200 cash back upon doing that. Okay, you guys got to realize that when you join True Trading Group, you're getting a professional level of education that's similar to what I learned that I worked at the fund. It's in depth and complex, yet it's easy to understand and implement quickly. Whether you guys never traded stock a day in your life, or you've been doing this for 10 years, the TTG platform can help you guys reach your goals. And I get asked all the time, like, what makes TTG different from a lot of the other trading courses that are out there? And for starters, TTG is a platform. Yes, part of that platform is courses, but we're so much more than that, because the TTG platform gives you access to premium tools from fintech companies like Benzinga, TradingView, Trade Ideas, Quote Media, CBOE, Polygon. These are tools that professional traders use that give them an edge, that they can make better decisions, but they cost like $4,000 to $5,000 a year. Okay, we have them all on our platform for you. Some people might be like, wow, that's incredible. I can't believe you include that in your membership. I know exactly how expensive those things are. But some of you might think, oh, well, that's cool, but do I really need all those things? The answer is yes. Yes, you do. If professionals use these things, don't you think you should be using these things? If it helps them make better decisions, don't you think you should use them as well? Even if you don't join True Trading Group, the chances are you're probably going to be buying these tools, at least some of them, if not even more of them. Right? We'll show you how to use all these tools and we'll give you access to them. Don't go and spend $4,000 to $5,000 a year on these tools. We have spent years building relationships with those companies so we can offer their products to you on our platform at no additional charge. Okay? Don't be overwhelmed by this information. Don't be overwhelmed by these tools and products. We'll show you how to use them and use them simply and quickly that you can use to make better decisions. And on top of that, you're going to be joining the TeachD family that is filled with 9,500 other like-minded and helpful investors that are led by our team of full-time trading mods that have over 100 years of experience trading stocks, options, crypto futures, day trading, swing trading, and also long-term investing. Results matter at True Trading Group, guys. Your results actually matter. Okay, this is not, True Trading Group is not about empty words and broken promises. Okay, results matter. We measure your results by your P&L. Not my P&L, not somebody on social media, is yours. Because my P&L doesn't pay your bills. Not even $1 of my P&L goes towards your bills. So we measure your results by your own P&L. And the fact is that the majority of members in True Trading Group are making money and they're becoming better traders. And to prove that, again, my TeachD fam, guys, do me a favor, just type the $sign in chat real quick. Type the $sign if you're making money and becoming better traders because of the TeachD platform. Type the $sign in chat right now. Anyone that's not a member, just watch how many people type a $sign. There's no difference between them and you. They found us the same way you did on one of these live streams. I paid $13.80, still a great deal. I'm a lifetime member now. Get signed up and learn starting tonight. Hell yeah. Yeah, see, K-Rock paid $13.80 for their membership and still said that that's an amazing deal. Fact of the matter is, guys, we can charge our original price. If I did not give you the discount, that $2,200 price that is our normal price, that's a great deal because just the tools alone, just the tools are $4,000 to $5,000 if you were to get them on your own. Just the tools, never mind the courses and everything else that you guys get when you guys join TTG. All right. So let me make myself clear, guys. The price of this membership has been steadily going up. It was like $11.35 yesterday. It's $11.50 tonight. We're going to be right up there, up over $1,200 here soon. The chance for you guys to get in here underneath $1,200, it's right here, right now. We've been saying it now for a week. You just have to go to ttgoffer.com and use the code TTG121. You'll get the 48% discount. Is that every year or just one time and cash back after 1 year? It is $11.50 or $9.50. My friend is interested. It'll be $11.50. So you'll join now for $11.50. You'll get the $200 cash back now, okay, this year. And then when it comes time to renew your membership, you are locked in at the $11.50. So even though our membership next year might be $2,400, you will only pay the $11.50, which is the price you pay when you join. So when you join, you're locking yourself in and grandfathering yourself in at that price. Okay, so you'll never pay more than the $11.50. Okay, so that's how that works. And guys, listen, you're also going to get 2 private study group sessions with a TeachD mod. Okay, small private study group session where you can get some individual attention. Okay, knowing what I know now, I would have paid 5 times that amount. Exactly. See, that's the value of the platform. But I want to make this, this information is so critical, and I want it. It needs to be within reach for people. It shouldn't cost $5,000, $7,000 for people to get access to this information. You shouldn't have to work at a fund in New York City to get access to this information. Joined 6 days ago and using the simulator while I'm waiting for my investment account to clear. I'm up 2% in my simulated account already. That's incredible. Great job. Listen, stay on the simulator. Keep it up. Go through the courses. Get yourself educated. Get yourself ready. I love it. The best gift I ever gave myself was a membership to TTG. I love it. Hell yeah, John. Hell yeah, John. Hell yes. Lakeisha's TTG is changing this corrupt industry. Thank you, TTG. It's my pleasure. Absolutely my pleasure. All right, guys. And also, last but certainly not least, you're going to watch real quick as I put my money where my mouth is. Okay. Anyone that joins here tonight before midnight, I stand behind this platform so much. Okay. I believe in the platform that we have created, and I believe firmly in our ability to help you become successful. That anybody that joins your trading group, okay, you have the entire year of your membership to go through our courses, pass our quizzes, and attend one of those small study groups. If you do those three things, at the end of your membership, if you have not made $1,150 at least one time throughout your membership, that's what you paid tonight to join. If you don't make $1,150, I'm going to give you double your money back. I'm going to give you $2,300. I'm dead serious. Sounds like a fair trade-off. I'm sitting up here telling all of you, join. I'm confident our platform can help you become educated and can help prepare you to take advantage of opportunities in the market. If I'm going to say that, I've got to be able to be accountable to you. I've got to put my money where my mouth is. I'm only going to offer this until midnight tonight. In the lieu of what's happening, I know people are getting kind of nervous. They don't know what to do. And I'm sitting here telling you guys, the time to get educated is now. And to ease those concerns, if you do not make the $1,150 back at least once, I will give you $2,300 in return. You don't have I'm not saying you have 30 days to do this. I'm not putting that pressure on you. I'm literally saying, join now for $1,150. Go through the courses and the quizzes at your own time, on your own pace, okay? Your own schedule, on your own terms. So they're all there on the platform, 24/7, 365. If you do that and still never make the $1,150, I'll give you $2,300 back. And with a refund rate since 2017, we have a refund rate of less than 3% and a retention rate of 77%. 77% retention rate. Not desperate, brother. Confident is the word I think you're looking for. I think the word you're looking for is confident, because TTG would go out of business if we were desperate and had to offer double your money back and nobody was making money. The word you're looking for, my friend, is confident. Learn the difference and learn it fast. Or choose to do whatever the hell it is that you do and watch whatever YouTube channel that you watch, or go read whatever Reddit page that you watch, that you read, and then good luck to you throughout your trading. The word is confident. There's a reason why 77% of our members are retained. So you guys got to go to just ttgoffer.com right now. Use the code TTG121. You get a 48% discount. I'll give you $200 cash back, so you have some extra cash to trade with or invest after you guys go through the courses and quizzes, and I'll give you double your money back if you guys fail to make the $1,150. That's how confident I am in our ability to help you become successful. All right. Guys, we got a code word for tonight. These are for members only. If you're not a member, don't worry about this. The code word for tonight is glizzy. Glizzy. That's a code word for tonight. The code word is for members only. We do a lot of fun giveaways with members. We give away cash and electronics. This is one of those giveaways. This is code word number 5 out of 18. 5 out of 18. The code word is glizzy. If anybody has questions about the membership, you can send a text message to 201-775-9702. Again, guys, that text message is 201-775-9702. If you guys have questions about the membership, don't hesitate. Send a text to that phone number. Don't call that number. Send a text to that number. It's right there at the bottom of your screen. That's 201-775-9702. All right. Guys, again, that offer is good up until midnight tonight. All right. Let me actually show you guys the platform itself. Okay. Let me show you guys the actual platform itself, because again, when you join the platform, you're getting access to all of the tools and resources that I explained to you before. But what I'll do is I will go over and share with you what all this stuff looks like. Okay. You're getting our chat room, which we're the mods and there's 8 other mods besides myself. We share our screen. We're live on the microphone. We call out our trades in advance of making them. We're there from pre-market until after hours. You can use our mobile app that lets you see the screen share, still be connected to chat, get real-time push notifications whenever the mods enter or exit a trade. You can listen to the audio analysis because we're talking to you on the microphone throughout the day. And you're also going to get now 2 small private study group sessions. I told you guys about that earlier, your chance to speed up your learning curve. Benzinga Pro's real-time news feed, live breaking up to the second news alerts directly inside of chat. The speed at which you get news matters, guys. Okay, the speed in which you get news matters. This news feed would cost you $1,400 if you went to Benzinga on your own. It's included. Okay, it is included with your membership. Do you share entries and exits on your trades? Asks Matthew Capitelli. Yes, Matthew Capitelli. I share all of my exits with my entries and exits with THD members. I actually will come on the microphone, Matthew, and I will tell you first where I'm going to get in before I actually get in. And then when my order actually executes, a notification comes up in the chat to let you know that my order has now executed. But I'll come on the microphone and I'll tell you, guys, listen, I'm looking at SPY May 27th expiration, $380 strike puts at, I'll tell you what I'm going to look at. I'll tell you what I'm looking at, okay, before I actually do it. All right. So you got the Benzinga Pro newsfeed. All right, you got the Benzinga Pro newsfeed. You're also going to get TradingView's premium charting software. One of the most commonly used charting softwares by active traders. All right. This will cost you a few $100 a year if you went to TradingView on your own, included free with your membership. You also get a Trade Ideas scanner. The Trade Ideas scanner is the industry standard scanner, folks. This makes sure that you're always focused on the hottest stocks during the day. Stocks that are making new highs, new lows, have a surge in volume. This will cost you a few $100 a year. It's included with your membership. You also get a simulator that lets you trade stocks and options with fake money, but with real-time data. So you can practice implementing what you're learning in the courses. Our own scanner, which also lets you scan for crypto. You get dark pool data, unusual options activity as well, stuff that used to only be available to professionals. Now it's available for my THD my THD members. A journal will actually track your trading and give you statistics so you can see what you're doing wrong, so you know where to make adjustments. A social sentiment scanner that will scour through Reddit, StockTwits, and Twitter and tell you what stocks are being talked about most on those platforms so you can stay ahead of the crowd. Every day, the mods publish a watch list with a game plan on how we plan on trading those stocks that are on our watch list. And of course, we have the courses. Guys, the courses are a simplified yet expanded upon version of what I learned working at the fund. There's beginner and advanced courses, options, swing trading, trade psychology, crypto, you name it, we got it, all in text and video format, whichever is easier for you to learn. There's no upsells for courses. There's no VIP or pro courses that cost more money. Okay? They're all included when you guys join the annual membership. You just have to go to ttgoffer.com, the next 20 people to use TTG121 coupon code, or until midnight tonight, whatever happens first. You'll get a 48% discount, the 2 private study groups, $200 cash back upon completing the courses and quizzes, and a double your money back guarantee if you fail to make the 1150. All right. Folks, it's time you guys. Oh, we also have a video library that is over 200 hours of additional educational video content. These are, I almost forgot about that, workshops and webinars we've conducted that, like how to grow a small account, how to trade while working a full-time job, how to resist FOMO, just to name a few things. And then you can actually attend those workshops live when you become a full member. All right. It's time you guys invested in something real, folks, something that's got the ability to help you guys reach your goals. Now, listen, I can't promise you success by joining True Trading Group. I can't guarantee you're going to make millions of dollars, and I can't guarantee your success. Okay, I told you, I don't sugarcoat anything. Trading's not easy. Okay, but I can guarantee you a real chance at developing the skills that are needed to become consistently profitable as long as you're willing to put in just a little bit of effort. And I'll promise you that if you fail to make the 1150 at least once, I'll give you double your money back. You just have to go to ttgoffer.com and use the code TTG121 right now. If you're still unsure about the platform, we have a 7-day trial. You guys can go to ttgthree.com. Again, that is ttgthree.com to join us for a 7-day trial. Okay? You get 7-day access. Weekends and holidays do not count towards your 7 days. You get a full 7 trading days. It's totally free. No credit card or information required. Just name and email and you're good to go. Go to ttgthree.com. That's ttg3.com. And you guys can join our 7-day trial. All right. That's it, folks. Thanks for joining me tonight. Remember, the next 20 people or until midnight tonight. And then the offer that I'm giving you, the $200 cash back, so you guys can have some extra cash to trade with or invest with. Okay. That's going away. And the double your money back guarantee is available also up until midnight tonight. Okay, that's it, folks. Thanks for joining me. Subscribe to the channel. Smash that like button. Turn on your notifications. I'll see you guys all in